Let me quickly ask you something. When you see a brown envelope from CRA in the mail, do you open it right away? Or does it just sit on your counter for a few days because you're afraid of what's inside? A lot of Canadians don't actually fear taxes, but a lot of us fear surprises. Big balances, scary wording, and penalties we didn't even know existed. So in this video, I want to take fear out of that envelope for you. By the end, you'll know the key deadlines for personal and self-employed tax returns, how interest and penalties actually work, and the difference between being late to file and late to pay, and exactly why you should file on time, even if you can't pay the full amount right away. If you've ever thought, I'll deal with that later, it's only a few weeks late, what's the worst thing that can happen? This video is for you, my friend. Hi, I'm Yudhvir Kabuli, a chartered professional accountant and a chartered financial analyst here in Canada with over half a decade of Big Four experience. A quick but important note before we continue with the video. This is for educational purposes only. It is not personal tax, legal, or financial advice. Alright, so here's the roadmap for today's video. Number 1, we'll look at the key personal tax deadlines, employee versus self-employed. Number 2, payment deadlines versus filing deadlines, and why that distinction really matters. Number 3, tax installments, who has to pay them and when. Number 4, GST and HST deadlines at a high level, especially if you're self-employed. Number 5, interest and penalties, late filing, late payment, and installments. Number 6, we'll look at real numerical examples so you can see how the cost can eventually snowball. Number 7, what to do if you're already behind, and simple habits that keep CRA interest from quietly eating into your net worth. So let's start with the big picture, deadlines. We're talking about your T1 personal tax return. For example, your 2025 tax year, which you'll file in 2026 this year. For most individuals, your filing due date is April 30th after the calendar year. If April 30th falls on a weekend or a CRA holiday, the deadline usually moves to the next business day. If you or your spouse or common law partner have self-employment income, your filing due date is June 15th, but your payment due date is still April 30th. That distinction is huge for my self-employed friends. Self-employed, yes, you get time to file, but no extra time to pay. So if you owe tax for 2025, CRA expects the money by April 30th, 2026 this year, even if your return isn't due until June 15th. If you file and pay after those dates, you can now be hit with late filing penalties and interest on any unpaid balance. So there are really two clocks running. Clock 1, the filing deadline, when CRA expects your return. Clock 2, the payment deadline, when CRA expects your money. You can be on time with filing, but late with payment, or late with filing, but on time with payment. Rare, but still possible. Or some of us might be late on both. You might ask, why does the deadline matter? The late filing penalty is a percentage of your balance owing, and it's on top of interest. Late payment on its own generally triggers interest even if you file on time. So even if you can't pay in full, filing on time can still save you a lot. You'll see that clearly in an example to follow. Let's talk about tax installments. This is another area that often surprises people. If your net tax owing is above certain thresholds, CRA may actually require you to pay tax installments for the following year. This is often common for self-employed people or people with significant investment income, some of us that are landlords, and people with large side hustles. Good for you, but the CRA is watching. For individuals, the standard installment due dates are March 15th, June 15th, September 15th, and December 15th. Installments are prepayments towards your eventual tax bill. They're not extra tax, but if you're late or short on installments, CRA can charge installment interest and in some cases, even an installment penalty on top. If CRA sends you installment reminders, please don't ignore them. And at least talk to your accountant about whether they really apply to you and how much you should reasonably pay. If you're registered for GST or HST in your business, there's another set of deadlines for you to track. At a high level, if you file monthly or quarterly, your return and payment are generally due 1 month after the end of the reporting period. So a quarter ending March 31st is due around April 30th. If you file annually, your return and payment are usually due 3 months after your fiscal year end. If you're an individual with business income and a December 31st year end, your payment deadline often lines up with the April 30th and your filing deadline with June 15th, similar to self-employed T1 rule. Late GST and HST returns and payments also trigger interest and potentially even penalties. So once you're self-employed or registered, you're really managing two tax systems, income tax and sales tax. Each has its own deadlines, interest, and penalties. Now the part that everyone is curious about. What actually happens if you're late? Think about this in 4 buckets. Number 1, late filing penalty on your T1. Number 2, interest on unpaid balances. Number 3, installment interest and penalties. And number 4, we'll do a quick note on GST and HST. If you file your return after the due date and you owe tax, the CRA can now charge a late filing penalty. For a first time or occasional late filer, that penalty is generally 5% of your balance owing plus 1% per full month your return is late, up to a maximum of 12 months. If you've already been charged a late filing penalty in any of the previous 3 years and CRA has formally demanded a return, the repeated penalty for you can now jump to 10% of your balance owing plus 2% per full month late, up to 20 months. So if you don't owe anything or you're getting a refund, there is no late filing penalty for you. But it's still smart to file on time so you don't delay any benefits and credits that you're supposed to receive. Separate from penalties, CRA charges interest on unpaid income tax balances, unpaid CPP and EI amounts, and any unpaid installments. The interest starts accruing the day after the payment first becomes due. For most individuals, that would be May 1st after the April 30th deadline. Interest is charged at CRA's prescribed interest rate, which can change every calendar quarter. And interest is compounded daily, so it quietly snowballs if you leave a balance unpaid. And there is no cap. The interest keeps running until that balance is paid. If you were required to pay tax installments, and you either didn't pay them at all or paid less than what CRA expected, CRA may charge installment interest on that shortfall. And again, the interest is compounded daily, and it uses the same prescribed high interest rates. If your installment interest rises beyond a certain threshold, CRA can also charge an installment penalty on top of that. So the practical takeaway for you is, if CRA sends you an installment reminder, please don't ignore them. Coming to GST and HST, CRA charges interest on late or insufficient remittances. There can also be late filing penalties for missing your returns and more serious penalties for repeated non-compliance. If you're repeatedly late on sales tax, that's a strong sign. You should now bring in professional help for your business. So let's run a simple example to make all of this real. Scenario A, you owe $5,000 of tax for 2025. You're a regular individual, not a repeated late filer. Your return and payment were due April 30th, 2026, but you actually filed and paid on August 31st, 2026. That's 4 full months late. Step 1, late filing penalty. Base penalty, 5% of the $5,000 at $250, and monthly penalty, 1% per full month. 4 full months, May, June, July, August, that's 4% of $5,000 or $200. So total late filing penalty would be $250 plus $200 for $450. Step 2, don't forget the interest. Let's assume for simplicity an average interest rate of about 8% over those 4 months. Roughly 5,000 times 8% for the 4 months is about 133% in interest. In reality, it's daily compounding, but this is just to give you a good ballpark. So to pay that $5,000 4 months late, you might actually be looking at around $450 in penalties plus about $130 in interest. Roughly $580 extra dollars for being 4 months late. That's more than 10% of your original owing balance. Scenario B, same numbers. You owe $5,000 due April 30, 2026. This time, you file your return on time, but you can't pay until August 31st, 2026. In this case, there's no longer a late filing penalty, but you still pay interest on the unpaid balance, around $130 in our simple example. So your cost is closer to $130 instead of roughly $580. That's why I highly recommend, if you have to choose between filing late and paying late, never choose to file late, never. Always file on time, fight the balance separately. If you're watching this and you're already behind on 1 or more years, here's the general order of attack for you. Step 1, file the outstanding returns as soon as possible for you, even if you can't pay it yet. Step 2, once CRA assesses the returns, you'll at least know the actual balance owed. And step 3, now you can set up a payment plan with CRA or pay what you can right away to stop interest, at least on that portion. In some situations, financial hardship, serious illness, or CRA errors, there is a process called taxpayer relief, where you can ask CRA to cancel or waive some interest or even the penalties. It is case by case and it requires proper documentation, and it's not guaranteed, but it's worth a shot. So the cleaner move is file on time pay as much as you reasonably can, and avoid letting balances sit for years at end. Let me now leave you with simple habits that will keep CRA interest and penalties from becoming a major storyline in your financial life. Number 1, calendar your dates. Put April 30th, June 15th, and the installment dates, March 15, June 15, September 15, and December 15, into your calendar with reminders. Number 2, open a separate tax savings account. If you're self-employed or have variable income, I want you to move a percentage of every payment into a separate tax account so that you're not scrambling at year end and wondering what to do in April. Number 3, file on time always, even if you're stressed about the balance. At least filing on time avoids that late filing penalty that would stack on top of interest you would have to pay. Number 4, respond to installment reminders immediately. If CRA is sending installment notices, please don't just ignore them. At least speak to a professional to figure out what you truly should pay. Number 5, get one planning meeting a year. A 1-hour conversation with your CPA who knows your situation can easily save more than it costs just by preventing simple mistakes that are bound to happen. So let's bring this home. Most individuals must file and pay their personal tax returns by April 30th. Self-employed individuals have until June 15th to file, but you still need to pay by April 30th. If you're late filing and you owe tax, you can face a late filing penalty of 5% plus 1% per full month late, or more if you're a repeated late filer. Interest on unpaid balances and installments is charged at CRA's high prescribed rate, compounded daily, and it can quickly add up. Installments are prepayments, not extra tax, but missing them can also trigger installment interest and penalties. So your next steps are simple. Step 1, check which deadline applies to you. Employee, self-employed, GST, HST, registered or not. Step 2, put those dates into your calendar today, right after you watch this video, with reminders for a few weeks ahead. And step 3, if you're behind, make filing those overdue returns your top priority. Once again, I'm Yudhvir Kabuli, CPA and CFA. Thanks for watching, and I'll see you in the next episode of your personal finance playbook, helping you realize the Canadian dream.